Hey you! Well done! If you're watching this video, it probably means that you want to get started investing and you're taking your first brave steps in finding out how to do so. And if you're watching this video, you probably want the answer to the question, where do I invest? Where do I buy my stocks and shares? Where do I buy my funds from? It can be a little unnerving, even daunting, trying to pick out a broker, particularly when you're new to investing or you want to try a broker but you've not really heard of them. So how do you know if you should go with a particular broker over another one? Well, in this video, I'm going to explain some key things to look out for when you decide to pick a broker, and hopefully it's going to help make that decision a little bit easier for you. So let's get into the video. What's up guys, my name is Johnny. Welcome to Millennials with Money. I upload to YouTube every Wednesday and Sunday, giving you content to help you take control of your finances today to create a bright financial future tomorrow. If you like what you see on the channel, I'd really appreciate your help in reaching more people. You can help me out by hitting the like button, subscribing and clicking the bell for notifications, and make sure you tell another millennial that this is where the good stuff goes down. So the 4 points I'm going to be looking at today, I'm going to cover them from the perspective of if you were a long-term investor. That's to say you invest in the stock market or in funds or ETFs from time to time, and you want to grow your money, your capital over the long term. You're not trying to make a quick buck, you're not making frequent trades, you're not trying to catch highs and lows and swing trading. If that's you, then this ain't the video for you. This is for people who are looking for an investment platform for long-term investing. Now let's get into 4 things that I think you should be looking for when you're considering whether to choose a particular broker or not. And at the end, I'm going to tell you a little bit about the brokers that I use or have used and my experience with them. So let's go. The first and absolutely the most important consideration you need is this broker regulated? Do they have a license to sell investments and exchange securities? And just because they say that they're a regulated and licensed broker, it doesn't mean they are. What you want to look for is in the equivalent of kind of the Securities and Exchange Commission in your country. So I'm sure in your respective countries you'll all know who that is. Just to give you some examples, in the UK that's the FCA. So you want a broker that is FCA regulated and authorized. In Europe, of course, countries have their own equivalents. In Spain, for example, it is the CNMV. In any case, you want to make sure that your broker is registered, recognized and licensed by one of these authorities. Something you might want to keep in mind though is if that's a broker that is licensed in a country that's known as a tax haven, such as the Cayman Islands, for example, or Cyprus, then you might want to reconsider that because it's a little bit dodgy. So besides the fact that a broker is licensed, compliant and recognized within a jurisdiction, another obvious benefit of going with a licensed broker, a recognized broker, is that in most countries there will be some kind of financial compensation coverage should the broker go under. In the UK, for example, the Financial Conduct Authority will cover you up to, I think it's £85,000 that you have. So if you invest, for example, £85,000 with that broker and the broker goes under, then your investments are still protected because it's the broker that's gone under and that broker is protected under the Financial Conduct Authority. I believe in the EU, at least in Spain, it's up to 100,000 euros. But again, same principle applies. Your money is protected should something bad happen to the broker. And this may seem like, well, duh, but Google them. Look them up on YouTube. What are people on the internet saying about them? That will also give you a good indication of the reputation, the bad experiences that people might have had, or the good experiences that they may have had with this broker. And it will give you an idea of if you feel comfortable going with that broker. The second important point to take into consideration are commissions and platform fees. A lot of brokers charge these days. They charge them per transaction. They might charge a holding fee for you having their investments with them. And obviously when you're investing, that's going to subtract from your potential gains, your potential returns. So you want to try and minimize these as much as possible. Now on the other side of the screen, I can hear the Trading 212 lot, the free trade lot, the stake lot saying, whoa, well, we invest commission free on these platforms. Why would you ever pay commissions when you can invest for free? Hold that thought. I'm going to come back to it at the end. There is a reason why you might want to consider paying commissions. The third consideration to think about is the user interface that the platform has. Now, it's something you might easily overlook based on the pricing of the service, based on the reviews you've read, but ultimately, if you can't navigate around the platform, if you can't tell how well your investments are doing, then it's actually not that great of a platform. Ideally, what I would look for in a user-friendly platform is ease of navigation, so being able to find stocks, for example, be able to manage my account. I want graphs, tables, charts, whatever it is, that shows me how well my investment is performing over the past week, month, long term, over the lifetime of the investment, for example. You got to be able to interpret these graphs and tables nice and easily so that you can understand how well your investments are performing. And last but by no means least, you obviously want a platform that makes it easy for you to buy and sell stocks, that you can do it right there, right then, that the execution is on time, that you get the price that you wanted, etc. Finally, you want to look at the range of investments offered. Does it offer stocks only? Does it offer ETFs? Does it offer funds? And what geographies does it cover? Does it have a nice range of US stocks? Does it have European stocks in the major markets? Does it have some of the smaller cap stocks, for example? Does it have ETFs and funds that cover various sectors of the economy and various geographies? I would say at minimum, you want to look for something that's got a wide range of US stocks, that covers the major markets in Europe, so London, Paris, Amsterdam, the DAX, etc. And also one that offers a range of funds by different geographies, by different sectors, by names such as BlackRock, Vanguard, Amundi, Lixor, Vanek, X-Trackers, all these kinds of names. If you get that, then you probably got a decent set of investments. And please, 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 please don't get lured into a platform because it offers CFD, Forex, Bitcoin trading. No, if you're a beginner investor, it's not for you. Only get into that stuff if you know what you're doing. It is a quick and easy way to lose money. So which broker do I use? Well, multiple is the answer. I use more than one. You may have got that from my answer at the start. I can't remember if I implied it or not. But yeah, I use more than one. I use Trading 212, DeGiro, and I use my bank, ING. So now I'm going to talk you through kind of why I use each one, what are the benefits, the drawbacks of each one, and how you might want to consider them as well. So Trading 212 is my favorite one right now. It's commission free, as I said back earlier in the video. So because there's no investment fees for the platform, it means you can contribute a little and regularly. You don't have to have thousands of euros to get started with investing on Trading 212. You can start with as little as €1. That's amazing. So now Trading 212 has made it possible for absolutely anybody to invest. And they have a really nice range of stocks and ETFs, which is forever growing. They have the US market, they have the major markets in Europe. They have a nice range of Vanguard, Amundi, iShares, funds and ETFs on the platform, which is great. In addition, they've got really nice charts and they've got really nice features that show you how well your investment is performing. So they'll give you the percentage, the money amount, and they've also got the historical graph so you can see how your portfolio was at a particular point in time. And I really like that feature of the platform. However, one of the drawbacks is when it comes to dividends, you can only ever accept cash. And some companies in real life will offer you the option to take dividend in the form of shares, or they might offer you shares at a preferential price if they're doing a new shares issue. This happened with one of my companies that I hold outside of Trading 212, and even though they're not on the Trading 212 platform, I know that if they were, I wouldn't have got that option. Now the reason for that I'm going to explain in just a moment, although one could argue that this is kind of solved by the automatic dividend reinvestment that the platform offers. But anyways, I'll come back to why that's the case in a second. The second platform I use is DeGiro, and I like DeGiro because it has a bigger range of stocks and shares, and it also has some additional ETFs that I can't get in Trading 212. You can invest in countries that are not on the Trading 212 platform, such as Portugal, for example, such as some Belgian stocks, such as Italy. There was also a small cap company in Spain that was too small to be listed in the IBEX 35 and in Trading 212, which I was able to invest in through DeGiro because of its range of smaller cap stocks as well. And DeGiro does charge commissions, but they are pretty low. They are from as little as €2 per transaction, and I think the percentage is also extremely small as well, so that doesn't work out taking a lot from your investments. However, my main criticisms of DeGiro is that the platform is not that user-friendly. It looks a lot more technical, a lot more daunting to a newbie investor than the likes of Trading 212. I also find it really annoying, the process of paying money into the DeGiro account. I think the process of paying into a German bank account, which is then paid into your DeGiro account, is really slow. It takes a couple of business days. And by that time, you know, the stock, the ETF you wanted to buy may have moved considerably compared to what you wanted to pay for it. So yeah, that's another criticism I have. If you want to be ready to take advantage of opportunities on the DeGiro, you have to keep your money locked away in the platform, ready for when that buy or sell opportunity comes up. Now let me come back to what I was saying when I was talking about Trading 212, and I mentioned receiving dividends in the form of shares and access to preferential share prices for new share issues, for example. The reason for that is that I think Trading 212 and DeGiro use omnibus accounts for their customers. That means that you are essentially anonymous, and it's just DeGiro and Trading 212 that are assigning you parts of shares that they really own. And this is why you may be willing to pay commissions to invest through a bank or another institution like I did with ING. Depending on who the bank is, then the shares will most likely be in the company's books in your name and not anonymously through one of these omnibus accounts. And that's the reason why with certain investments I get emails saying, would I like to receive my dividend in cash? Would I like to receive it in new shares? How I got that email saying, oh, this company is issuing new shares, but there's a preferential price for new shareholders. Would you like access? All of this is thanks to going through an institution and not one of the DIY platforms that they call. And if you're going through one of these banks that is allowing you to hold the shares in your name and is not using the omnibus accounts, then it means that you can transfer those shares between institutions without a problem. So let's say, for example, I bank with ING in Spain, and I decide tomorrow I want to move my shares to Santander. I can simply do that through a simple transfer of investments or of my whole portfolio even between the two banks, because the shares would be in my name. And that's something that you can't do with DeGiro and Trading 212 because they're using omnibus accounts. So your name is not on the books. Your shares are essentially stuck in those platforms until you sell them. Another advantage that you should get in theory by paying these greater commissions is you should get a better customer experience overall and a better customer service should you run into any problems. Has that been the case for me? Sometimes yes, sometimes no. I'll not get into that story on this video, but in theory, you can expect a better level of customer service for paying greater commissions. Is paying commissions really worth it, and is it going to change your experience that much? Probably not, but I'm just telling you a few points that you might want to keep in mind if you're someone that likes to move banks frequently. Because remember, if you're investing over the long term, that could be a long time. That could be 5, 10, 15, 20 years. It would of course be good to have that freedom should you ever need it. And another important advantage of going through a bank or a bigger financial institution is that normally, if there's the option of kind of tax advantage investing accounts such as the ISA in the UK, such as the PEA in France, with the exception of Trading 212, the smaller DIY brokers typically don't offer these services, but the bigger banks do. So if you want to take advantage of kind of tax-free investing or tax savings investing, then you might want to start by going to one of the banks, one of the bigger financial institutions in your country. So just to give you an idea of a couple by country, I think Interactive Brokers is present across most of Europe. In the UK, a lot of people talk about AJ Bell and Hargreaves Lansdowne as the top ones. In France, I would say maybe ING and Boursorama. In Spain, again, you've got the likes of ING, Renta 4, Santander, Open Bank, these kinds of platforms. Obviously though, because of the commissions in some cases, you may need to be lump sum investing to make sure you get the most out of those investments. And of course, none of those brokers that I've mentioned is a recommendation. They're simply ideas to help you get the ball rolling in your search for a broker. The final point I want to touch on comes back to something I mentioned at the start about your money being protected. By using 3 brokers, My money is spread across those 3 brokers for different reasons, as I mentioned before, but also that helps me protect my capital to a maximum. Let's say, for example, you take one broker and you're protected up to 100,000 euros, but you have 300,000 euros invested on that platform. If that platform goes bust one day, then yeah, you're covered up to 100,000 euros, but you've lost 200,000 euros there. However, if I split that 300,000 euros across multiple accounts, let's say 100, 100, 100, then I can sleep peacefully at night knowing that I've got all of my money protected by some form of compensation scheme that exists in my country. So there you go, guys. We covered 4 main considerations, but as you see, when you start to look at the intricacies and the specific points of brokers, you start to see how different things might stand out to you, how certain brokers might appeal to you more than another one. I'd love to know what brokers you guys are thinking about using, or if you're already investing, what you are using and why you do and don't like the platforms. So please leave a comment and let me know your thoughts. That's all from today's video. Hope you enjoyed it. Be sure to check out the Millennials with Money social media and internet pages, and also the other videos on this channel. I'll see you on the next one, and let's get this money.